One of the most common questions we get asked, especially when we're out talking to businesses about their performance, is where has all the cash gone? Answer to the question is often hidden in the balance sheet, but often many small to medium business owners don't know how to read their balance sheet or don't even ever look at the balance sheet. But there's 4 key places that your profit disappears to and doesn't turn into cash. And the first one is loans, and in particular, your principal loan repayments. So when you make a repayment to the bank, typically there is a principal portion and an interest portion. The interest portion appears on your profit and loss and therefore reduces the profit that's being disclosed, but the principal portion doesn't go to your profit and loss statement. And so therefore, if you're contributing a lot of principal loan repayments, then you're going to have to fund that cash out of your profits. And that's where a lot of where your profits go. The other one is tax, and in particular, prior tax payments, but also you might be looking at a profit and loss statement that doesn't provide for the tax. Typically, your accountant will journal that in for you at the end of the year. So if you're in a company structure, for example, quite often you'll straight away lose 27.5% of those profits to a provision for tax. Often people are also catching up on old tax payments, so that's essentially like a loan as well. So those repayments of those old debts is another place that your profits disappear to, hence why you don't have as much in the bank account. If you're investing money in capital, now what I'm particularly talking about there is maybe you're doing an office fit out and you fund it from cash. Maybe you're buying a new car and you funded it from cash. Maybe you've bought some new office equipment or some new machinery for your production. Now, if that's the case and you've funded that from cash, that won't be reducing your profit, and that is where your profit is disappearing to. And last but by no means least, the other common one is owner's drawings or owner's remuneration. So accountants will quite often change the nature of those payments which are made to owners, and depending on how that's taken out will depend on how it's reported in the profit figure that you're talking about. Quite often for tax purposes, we'll have you take drawings, owner's drawings throughout the year. They will appear like a loan on your balance sheet and they don't get offset until the end of the year by a distribution or by a dividend. Unless you're getting paid by wages, then those owners' amounts will not appear on your profit and loss, and then it's another reason to explain where all your cash has gone.